more than a few times. Happy Tuesday. It feels like a Monday though, doesn't it? Great, great to see everybody. All right, so welcome to our Caffeinate and Dominate 20 minutes. As always, if you have any questions, feel free to type them in. And we're going to take a look at this week. Now, we got through last week. I say got through because we're basically leapfrogging from inflation number to inflation number, from jobs number to jobs number, and from Powell event to Powell event. And just when we think we've got the major event behind us in the hold in June, which really should have been called Kick the Can to July meeting, we have 2 days starting tomorrow of the Humphrey Hawkins testimony. I don't know why they don't call it that anymore. But for those of you who've been trading for a couple of decades, you remember this was when we have 2 days of testimony in front of the Senate Banking Committee, where the head of the Fed talks about the monetary policy, their outlook on the economy, and all that good market moving stuff. Ultimately, what we want to remember about the next couple of days is everything maps to the end of July meeting. Are we going to see the quarter point hike? How hawkish is Powell going to be? And so when I think about the narratives that are out there this week, and it's funny, usually every week there are sort of three narratives that I look at from the standpoint of this is what's moving the market. And I'm looking at this week in the markets newsletter right now. The big three has the market, or really for now, the market has amnesia. It's forgotten about recession. And rather than go back to sort of the hackneyed inverted yield, right? Because let's face it, that's been something talked about now for a very long time. I take a look at two different ways of looking at data, whether that be oil and ISM. So I've got two looks at the at possible recession in that regard, and when at what point does it circle back, or we start to worry about it again, because that doesn't seem to be the concern. All right, the next thing is looking at financials, right? If we're going to look at the bigger picture theme for this week, look at what happened with KRE and XLF last week. That's going to bode pretty darn well for the Russell, the Dow, and the S&P. So those are things that are on the radar right now. And ultimately, what I want to do is, focus on, okay, what's going to move the market this week? Powell and Powell, right? And then are there other hot zones that could give us opportunities for a pullback? Because if there's a question that I've been getting a lot of in whether it's this week in the markets, with the show we do on Sundays, or whether it's in Charts and Coffee, it's been a lot of, Rog, are we at a top? And gang, nobody knows, right? I mean, I hope that's so blatantly obvious. Just thinking to yourself, wow, asking another human if they can see into the future is probably not going to get me a high probability answer, right? I mean, everyone has an opinion, just like I can guess on who's going to win the game, but it's that same level of thinking. Hey, who's going to win the game on Sunday? Nobody knows, right? Is this a top in the S&P? Right? Nobody knows. However, what we want to think about is more tactically, what if we pull back, right? That's really the question under the question. What if we pull back? Do I want to be a buyer? Is this a broken trend? Where are our relative outperformers? So what I really hope to do is break this, and it's a terrible habit that I see. Anytime I watch what's happening on television, they're in the prediction business, right? They're really in the entertainment business. So yeah, they're going to entertain nonsensical questions like, where is the market going to be in 3 or 6 months? Come on, right? So what we want to remember is we trade a very short window, right? Trading is a shorter window, and it's a shorter time frame. So as long as we can keep that in mind and keep an eye on what's going on this week, right? And then we pile on the data week after week after week, a bigger picture emerges. Yes? I hope that makes sense, because if there's anything that I can do, it's just improving my own thinking and taking you along for the ride, reminding everybody we can't see into the future. We don't see around corners. Nobody knows where market tops and market bottoms are going to be, but it sounds so tempting when someone comes out with bravado and maybe a bit of arrogance and says, this is the top. Well, at some point, if they call enough of them, they'll be right. What's that old saying? A blind squirrel finds a nut every now and then too. That's really what they should call financial media. All right. Did I wake up salty? Probably. I hate 3-day weekends. I never know what to do with myself. I'm so glad that markets are back open. We can get back to work. We take a look at Microsoft. Let's do it. All right. So if we're taking a look at Microsoft, beautiful uptrend. Editor, beautiful uptrend. Relative performance. Relative to what? Relative to other stocks in the NASDAQ, the S&P, and the XLK, right? Is this one of the stronger looking uptrends? Is this one of the better, more stable uptrends within the context of stocks that move with Microsoft based on indices and sectors? Yes, relative to what? Not relative to some random scan of 6,000 stocks. I don't play that game. What I say is relative to what? To high concentration weighting. Yes, buy the dip. Look, if Powell's going to come out on Wednesday and Thursday and maybe sound a little hawkish, maybe sound a little bit more hawkish than stock bulls would like, that could be a catalyst for a pullback. So I like the idea of a pullback buy, editor. Yeah, absolutely. What do I think about dark pools? Sergio, I don't give them another thought. Yeah, I think they're one of those things where it's like the dark at the top of the stairs. It's algos, it's HFTs, it's system trading. It's all those things that us traders want to use as an excuse as to why it's on a level playing field. Hint, it's never been a level playing field, right? So dark pools are transactions that happen, outside of the normal volume that we would see. But then we've always had block trades, right? So we've had variations of this idea. So what do I think about them? I don't think about them at all. And they're transactions that happen away from the main exchange, right? But again, it's kind of a variation. I'm not a fan. Let me just put it that way. I'm not a fan, but there's nothing I can do about it. And I don't give it a second thought, Sergio. Yeah, I just don't give it a second thought, to be quite frank, ever. There's always going to be something, right? There's always going to be something. And if I keep in mind that as long as I'm tracking the volume that I have access to, and as long as I'm looking at price, all the things that I don't know, and I could fill every single book behind me with all the things I don't know. But what I do know is everything that's happening in the market that I don't even understand or am aware of is somehow factored into volume, price, volatility. So if I can track those things, I'm going to be okay, right? And I say that as having done this for 30 years. As long as I can track those things, we're going to be okay. All right. So next up is, let's see here, CCL and Intel. Sure. CCL. It is a sub $15 stock. So what we need to do is this. Jump on over to TradingView, pull it up on, let's see here. Pull it up on TradingView with some volume profile, volume based on price, right? So if I look at volume based on price, is there anything here that is useful? Let's see here. That's tough to say, my friend. A mean reversion is, as you can see here, almost 4 points away. So I'm not looking for a mean reversion to the 34 EMA wave. I'm not even looking at necessarily the 200 propulsion, although you can see how long it took to break above it. And then once we broke above it, the acceleration that occurred, not surprising. Same thing with the point of control for the year. Let's see here. Yeah, look at once we got through the point of control, so between those two levels, the point of control and the 200 propulsion, you can see how much that accelerated price through about $11. Now, maybe a gap close. It's a small volume ledge around 13.10. All right, Intel. Stick with the TradingView charts. Of all the symbols that I could look at in the NAS or in the SMH, I'll tell you this. I think it's really important to go back to relative outperformance. And when I look at relative outperformance, let's see here, let's pull up SMH. When I look at relative outperformance, I can't say that, look, Intel's in an uptrend. Almost all of the semiconductor, the SMH is in an uptrend, sans Texas Instrument, which is above the 200. At least it's in the bullish hemisphere. And Qualcomm, at least it too is getting above that 200. So everything here looks bullish. Even the sideways markets have gotten above key price levels into the bullish hemisphere. And then ultimately what we want to remember is that if we're going to find relative outperformance, it's going to be on a dip. So I'd say in the case of Intel, a lot of times the trade we take is the one that ultimately triggers. There's trades we want and there's price levels we hope price gets to. But at the end of the day, a lot of times what we trade is simply the levels that are actually reached. And that means that, yeah, if Intel pulls back to say $32, I might be open to that. But if, for example, AMD pulls back to 115, I might be open to that. If Micron pulls back to Darvis support around 64, again, I might be open to that. So a lot of times, the part of trading that we cannot control is we have a wish list, we have a number of prices we know we want to engage a stock or ETF or futures contract at, and then it's just left to which one do we get, right? Which one do we get? All right, next up is Booking. That's a really pricey name. And then remember, M, cool question. But remember, just like summer driving season, if there's going to be a crude oil rally related to summer driving season, it's going to happen usually in, say, April, March, April, right? We look ahead down the calendar to where demand is going to be. And so any rally that's around an event is going to happen usually months before, right? So book it's summer's already here, right? So if there was going to be a rally, I would have looked for it to happen at the beginning of the year. So crude oil might be a February, March, April window to the summer driving season. So I would say Booking would be similar to that, right? If there's going to be some kind of rally in Booking related to summer travel, as you've asked, I would think would happen, really late Q1, maybe early Q2 type, not even, maybe early Q2 is the window. But once we're sitting in June, once we're heading into July, that's already been discounted typically, if that makes any sense. So anytime we have, if it's a winter demand narrative, right? Oh my gosh, we're going to need heating oil in winter. We don't think about that in November. It's already priced in. The heating oil seasonal is going to kick in around August, right? Because we know winter's coming. So always think, what are the months preceding the expected demand, right? And that's usually going to put you on the right timing for the trade. All right, next up, Stone Castle Project. Are your alerts on trending stocks mostly limit orders on pullbacks, the wave, daily, hourly, or do I use breakouts too? Stone, I do like mean reversions to my 34 EMA wave, but right now we've been doing a lot more with historical price movement ranges, because when you have trends that are as extended, if there's no agreed upon mean, right? The mean is just an average. So whose average is it? I could have a mean reversion with a VWAP. I could have a mean reversion with a 34 EMA wave. Some people like a mean reversion to the 21. Others are going to wait only for a 200. So there's lots of reversions that different people are looking for. But interestingly enough, all of those are way, way, way out from where price is right now. So what I've been doing and what we're doing in the mastery, what I've been doing personally, and the type of setups and zones I'm watching are based on volatility. So take a look here. This is the S&P. My mean reversion would be beautiful. It'd be down around 4,300. I got a volume ledge there. Have my 34 EMA wave. It's a trend, which is exactly when I'd want a mean reversion setup. But I'm likely going to be looking at the daily price movement range, which is the gray zone of support. Look how much further ahead of the mean reversion it is. And that's really where, in an environment where we're accelerated in terms of a trend and we're not making more sizable pullbacks, the alternative is retracements to something like a Darvis or something like this with the daily price movement range. Do I like breakouts? Very rarely. Very rarely do I play breakouts. There's nothing wrong with them. I just don't like them. It's kind of like chocolate and vanilla ice cream. I'm definitely a vanilla girl. So It's not a judgment call on good or bad. It's more which do I prefer, and I'm much more a mean reversion, pullback, retracement type trader. Yes. All right. What is the setting for my MACD? I don't have an MACD on the chart right now, Richard. That's actually a slow stochastic that I have slowed down to a 21K 3D 80/20 level. But when I use an MACD, I'm pretty vanilla about it. To stick with my favorite ice cream, uh, 12, 20, 12, 9, 20, the 12, 26, 9, the default. Yeah. I keep it default. I try not to do too much fancy stuff with certain types of indicators like a MACD, but there's a lot of cool MACD settings out there, but I just use the popular default on that. But granted, I don't use a MACD that often. Okay. What do I think of Mara? Not interested right now. But Richard, here's one thing that's worth keeping an eye on. Any market that's moving sideways is like a coiled spring. Now it could do this for the next year. It could do this for the next 6 months. It could do this for the next 6 days. Don't know. We need a catalyst, right? We need a reason for Mara to break out, and obviously that reason is probably going to be something around crypto. But we need a reason, and clearly we don't have a reason right now. The problem with a market going sideways is we really don't know which way it's going to break, but I would presume the breakout would be to the upside. That's what I'd prepare for. So if I know that, what I'll do is I'll situate myself much like I would in natural gas, where we have another sideways market, just meandering, meandering, meandering. Look at the Darvis. Look at the automated support and resistance levels of the Darvis, right? You can see the yellow and the purple lines here. When price gets down to that area, it's a lot easier to control risk from the floor of a sideways market, because that's where the demand is kicking in. A floor is buyers. Buyers bring demand. So that's all the same thing. So if I look at that level, that's probably the easier place to sort of dig your heels in if you're looking at that. All right. Next up is, bear with me here, gang. All right, taking a look at our training room. Where did I put that window? There we go. Hey there, Ann. Thanks for Sundays This Week in the Markets Live and yesterday's Charts and Coffee. Oh, yeah. You can catch all that for those of you that might have missed that over at the Simpler Trading YouTube channel. What are my thoughts on AMD? Sure, JT. Buy the dip. Absolutely. Overall uptrend. Buy the dip. That would be a mean reversion to the 34 EMA wave, or here's what I see on the daily time frame. We're pushing the validity of the daily price movement range, and just below it, if you take a look, let's squeeze in the year. There we go. We have a point of control. Where is the point of control? Let's see what we have. Oh, we have a little bit of a volume ledge sitting at about 119. So this area here where we're opening, there's a bit of volume there. So I'd keep an eye on that. But this is where I'd say if I'm looking at historical price movement ranges and I see a candle that large, that is a candle of unusual size. It's a little bit larger than the average candles that preceded it. An inside candle or minor low would be a really powerful thing to have. Or I can just crack open SMH and ask myself, are there any other individual symbols, right? Individual symbols that have better respect for levels like the daily price movement range. But generally speaking, I'd be a buyer. All right, gang. And just like that, I am out of time. I will see you all tomorrow, same time, same station, 9 to 9:20 Eastern. Get those questions in early. I will talk with you then. Be good to each other.